Hey, good morning everybody. Today is Thursday, June 16th, 2016. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning with our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors, spectrum analyzer to identify market leadership on a daily basis. Yesterday, of the 100 most powerful stocks in the most powerful industry groups, 31 came from real estate investment trusts. Almost a third of the top 100 came from the real estate investment trust industry. Precious metal mining, we saw 19 stocks in the top 100 most powerful stocks in the most powerful industry groups. Application software, 5 stocks. Casino and gaming, 4. And then rounding out the top 5, we have specialty apparel stores, communications equipment, and biotech with 3 stocks each in the 100 most powerful stocks in the most powerful industry groups. Real estate investment trust is very strong at this point. We've been seeing quite a bit of application software, and precious metal mining has been a good place to look for leadership in this market. Let's start this morning by taking a quick look at the Russell 2000. As you know, I think the key to the market going forward is the Russell 2000. The Russell yesterday tested resistance up here in the 1156 area and failed. I think that's significant. I think that it's important for the immediate term in the market that we hold this 1140 area. If we were to undercut that, the next significant area of support is going to be this mid-May low. One of the things that gives me hope for the market going forward is that the Russell continues to make higher highs and higher lows. Notice how we easily took out the mid-May or early May high in the Russell 2000 and put in this interim high over here. If we were to undercut this mid-May low, that would be, I think, a very bearish indication for the market overall. What you're going to notice when we look at the Nasdaq Composite and the S&P 500 is that neither of those were able to better their late April, early May highs. Let's see what the Nasdaq Composite's up to. But before we do that, yesterday was a very disappointing day for the bulls as stocks sold off hard in the final hour of trading, erasing what had been some solid gains earlier in the day. The good news for the bulls is trading volume was lighter than the prior session, indicating that the professional money managers that moved the market weren't in an all-out stampede for the exit. According to our count, both the Nasdaq and the S&P 500 currently have 3 distribution days or days of selling by the professional money managers in the past month. Investors.com has a higher distribution count with the Nasdaq indicating 4 days and the S&P 500 5. The older distribution becomes the less relevant. We stop counting distribution when it's a month old. Investors.com doesn't purge distribution from its count until it's 5 weeks old, and they count stalling days. A stalling day is a form of distribution that requires an index to close higher, but at the bottom of its daily trading range in heavier trading volume. Unless it's egregious, we don't track stalling days. All that noted, Investors.com has lowered its market outlook to an uptrend under pressure. Our market timing model is clinging to a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. A bright spot for the bulls Wednesday, advancing issues top decliners by nearly 3 to 1, while new highs bettered new lows. According to our Ramosi ratio, small capitalization stocks bettered large and continue to outperform on a 10-day moving average basis. Bulls prefer to see small caps outperform. The short-term McClellan oscillator remains bearish, as does our high-low indicator and the Wells-Wilder directional movement indicator, or the DMI. Our high-low indicator is typically one of the first indicators, if not the first, to show a change in market direction, but also is frequently early and prone to false signals. From a market perspective, both the S&P and the Nasdaq have undercut their 50-day moving averages and are barely clinging to buy signals. While our distribution count is less of a concern, we're seeing short-term strain in the market. The market looks as if it needs to consolidate gains, with both the Nasdaq and the S&P failing at critical resistance levels last week. It becomes important that we hold the mid-May support. For the Nasdaq, that's in the 4678 area. For the S&P, 2044. We'll see if we can hold these key levels. In the meantime, traders should be as fully invested as they're going to get, and as always, should keep their stops in place and current. Okay, yesterday, the Nasdaq Composite was down 8.62 points, or 0.18%. We closed at 48.34, and we gave up early gains in the Nasdaq to close right at the bottom of our daily trading range. That's a little bit of a disappointment to the bulls. Right now, the Nasdaq has minor support here at the 200-day moving average. If we were to undercut the 200-day moving average, we have critical support down here in the 4678 area. Notice how the Nasdaq put in this high around 49.69 back here in the middle of April. Came up, tested that area, and failed. If we were to undercut this 4678 area, that would indicate another intermediate term downtrend in the market, and that would bring these lows in the market into play. Yesterday, the Nasdaq traded lower volume than the prior day. For you followers of William O'Neill, we are in a uptrend under pressure. We've been in an uptrend since February 18th. We have a total of 3 distribution days in the past month. That's not a lot of distribution, and this day will disappear from our count over the weekend. Right now, our market timing model is clinging to a buy signal. And let's talk about that for a minute. Let's take off these markups. And I want to talk about what it would take for the Nasdaq to go to a don't buy signal. To go to a don't buy signal on the Nasdaq, we're going to look for 4 things to happen. First, the Nasdaq has to be trading above its 200-day moving average. We show the 200-day moving average here in black. We are barely clinging to that 200-day moving average. Secondly, the 10-day moving average has to be lower than it was the day before. We show the 10-day moving average here in green, and it's quite obviously below where it was the day before. Third thing is the 21-day exponential moving average, which we show in pink, has to be lower than it was 2 days ago, and that quite obviously is lower than it was 2 days ago. And the final criteria is the Nasdaq has to trade at least, or close at least 1% below its 21-day exponential moving average. We have not as yet undercut that 1% envelope around the 21-day exponential moving average, but a down day today would certainly do that. And so we are, as I've noted before, barely clinging to a buy signal in the market. If we were to undercut this envelope, which we show in black dots, that would change our market to a don't buy signal, And if we were to undercut the 200-day moving average, that would change our market timing model to a sell signal. Let's see what the S&P 500's up to. The S&P yesterday also had a disappointing day, giving up some fairly significant gains to close down 3.82 points or 0.18%. We closed at 2071. Notice we were trading significantly higher earlier in the day. We closed down and at the bottom of our daily trading range, which is going to be a bit of a disappointment to the bulls. We closed barely above this lower envelope around our 21-day exponential moving average. If we were to undercut that level, we would go from a buy signal to a don't buy signal on the S&P. Trading volume yesterday was below the prior day and about daily average. The S&P 500 is currently in an uptrend under pressure, has been in an uptrend since February. We have 3 distribution days on the S&P 500. Not a lot of distribution, and by the end of the weekend we're going to lose 2 days. The distribution count really isn't a major concern here. What's more of a concern is the weakness that the S&P's displaying and the possibility of undercutting this 1% envelope. Again, the S&P, notice we put in this high back in the middle of April. We put in an intermediate term low, right in this area, in the 2044 range. And then we came up and we tested that resistance area in the 2116 range and failed. If we were to undercut support at the early May, mid-May 2044 level, that would put us in an intermediate term downtrend. Right now, at least for today, our market timing model is indicating a buy signal on the market. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.